RFT Nation, what up? And welcome back to another video. After watching this video till the end, you will know exactly the best time to trade in the market, when it is the right time to be in the market, and which instrument should you trade at what time. Some of the losses you've taken in the market are not only caused by you entering in the wrong place, but some of them are caused by you entering in the wrong time. You either enter too early or too late when the market is done moving for the rest of the day, or before it's time to start to be active. So let's get into the charts and show you exactly what I'm talking about.
Welcome to RFT Airlines.
Now we are here in this diagram. But don't worry, we are going to start from this diagram to make some few rules, and then after that we'll move to the charts to show you exactly what I'm talking about in this diagram with more chart examples. Right, let's start. So firstly, we are going to skip this shaded part right here, the window of 2 to 8. Why skipping it is because most people are sleeping at around this time. No one is interested in trading around this time right here. But one thing that you should understand and know about this is that don't try to trade anything that doesn't belong in the session right here, because if you're going to try to trade anything that doesn't belong in the session, you are going to take in unnecessary losses, because those instruments, either they won't move, they will be consolidating, or if they did move, they will be moving indecisively. They won't show a clear direction that it is taking from them. So instruments that you can take right here that belong in this session are the Australian dollar, NZD and JPY only. So now let's start and get to the real part, or to the real deal right here. Now a lot of people are talking about the London session, and they generalize things by saying the best time to trade in the market is during the London session, without getting into more deep details on what they're talking about when they say that. But let me brief you exactly what's going on. Now, under the London session, there are two sessions right there. There's what LTS that starts at 9 and 1 p.m. So this timing element of all of this is in South African time, UTC +2. Right. So under 9 to 1 p.m. these are only instruments that you can trade, or currency pairs that you can trade right here, or currency pairs of this nature: GBPCHF, GBP, GBPJPY, but avoid USD and CAD. Avoid anything that has something to do with the USD or the CAD at around this time, because it has its own time right here, where we say here you trade any currency pair that is the dollar or the CAD, that starts from 1 p.m. up to 6. That is post LTS plus the currencies market. That is when you can start to trade instruments or currency pairs like the GBPUSD, USD and XAUUSD. That is why you even see me trading the XAUUSD or GBPUSD as from 2:30 going forward. Why? Because that is between 1 and 6 p.m., which is the safest time to trade these instruments right there. Now, and then I've got right here 15:30 up to 6 for the NQ USD and BTC USD. Now, I know someone will say, the New York Stock Exchange doesn't close at 6. I know New York Stock Exchange doesn't close at 6 right there. And as I mentioned from the beginning of the video, that I'm going to explain this at the trader's level, not by the book, because the book can't trade. I do trade. I trade in the market. So that is why I'm putting it in this way. Right, I'm putting 6 right here because that is the time where I stop trading, opening a new trade, or doing anything in the market from there. Or either maybe I will be holding a position that I already took earlier from the New York Open from there, or during early hours of the New York Stock Exchange Open from there. Why? Because after 6 the market goes to sleep most of the time. But if it did move after 6, what you're going to see, those movements will be off from the movements that was already established at an early hours of the New York Stock Exchange Open. So from there, they will be serving as a continuation. No new movement or new trend or anything like that will be started after 6. So that is why I put it 6 right there. Now let us get to the chart. Now we're on the first example here. First example is on the XAUUSD, the gold spot, and the gold spot falls under the post LTS instrument, so it starts to be safe to trade it as from 1 going forward. That is why we have 1 right here, and then as from 1, then the market started to be more decisive in terms of direction, and then it started to be active. But before 1, you can see that the market has been indecisive, low volume, and it has been choppy. So you can't trade in a situation like this. It's difficult to trade here and dangerous. move on to another one. This is the second example on the XAUUSD right here. As you can see, 1, and check what happens. It starts to be decisive in terms of the direction as from 1 going forward. And then before 1, you can see that the market has been sleeping, not doing anything right here. It has not been decisive, and it has been ranging at a bit more widened range. But after 1, it started to be more decisive, which is the safest time to trade it. Now we are on the second example right here, and the first one on the NQ NAS100. And we said NAS100, it is better and safe to trade it as from 1530 going forward. This is 1530 here, and then that is when the market started to be decisive in terms of the movement, and it started to be more active right here, as you can see. But before 1530, this thing has been indecisive. It has been low in volume, as you can see. So you can't trade in a situation like this. So let the market run and do anything that it wants to do, and then after that start to be active right here. Even if like you took a position somewhere here down there, the market would have started to be more active and decisive as from 1530 going forward. Let's move on to another one. This is another one, the second example on the NQ right here. As you can see, 1530 right here. What it did, it started to be more decisive in terms of the direction right here, as you can see. But before 1530, you can see that the market has been going up aggressive all the way to the down aggressive without any signs of reversals or of reversing or anything like that. Even you can see as from the start of the day, this thing has not yet shown clear direction, clear intentions right here. Up until we got into 1530, that is when it started to be more decisive in terms of the direction right here, all the way to 6. Now this is the third example and the first example of the currency pair, the GBPUSD. We said GBPUSD falls under the post LTS, meaning it starts to be active and decisive as from 1 going forward. As you can see, this is 1 right here, and then the market started to be more decisive all the way to the downside aggressively. But prior 1, this thing has not been moving that much, has not been decisive in terms of the movement. It has been consolidating, going up and down, not showing any signs of life right here. But right after 1 right here, it started to show signs of life and it started to move right here. This is the second example on the GBPUSD as a currency pair. This is 1 right here, and then after that you can see the market started to be more decisive and went all the way up right after 1. But before 1, what this thing has been doing, it has been consolidating, not showing the direction that it wants to take. It has not been moving that much. Even if like you've taken a trade anywhere from here, your trade was gonna start to move when the market like is on the other side of 1. That is when it was going to start to show signs of life right here. So that is how you approach the market. That is the timing element in the market, how you should approach these instruments at this time. Now you can start to build your trading model off from this information that I just gave you right here, and not to enter in the market either too early or too late in the market. We kill banks.